G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Be sure to check out my links below, including exchanges I use and social media content that I post. All right, let's go. So the topic for this video is just going over the stock market indices, mainly the Nasdaq, and what it has done previously, going back to the 80s, showing some interesting patterns on it to show you that it may play out similar this time. We'll have to wait and see. Nothing's a certainty, only probabilities. So I'll just show you that, and I'll go over the S&P and its current price levels and where I see it going. And yeah, just look at some other indices as well to see where we're tracking. And we'll go from there. Okay, so first up, we have the Nasdaq, and I'll show you something really, really interesting. Going back a fair way. So I pull up the MACD, okay, and we'll go back to the start. I like starting here and going back, but we'll start back to the 80s. All right, where it sort of first, you can see, it probably goes back further, but it's just the data I have. I'm stuck with it. Anyway, we had the MACD. So we had the first, over bought level, and it came down, price did, and then oversold. We went back up, overbought. You notice what happens here is this high, right, is lower than this one. Okay, that one there. I'll make it red so it's a bit more noticeable. All right, maybe the other red looks better. Okay, that one there. So as you can see, it makes a higher high in price. That one, it makes a lower high in MACD. It's called Divergence. And then we had another level even higher, a third higher high. And then MACD went even lower, which is the lower level there, which you can sort of draw it like this if you want to. At the end of the day, if you extend that line, this one here, and go down, it shows you the same thing because we're getting lower highs on the MACD. And on the weekly price action, we're going higher. So that's three drive divergence was what I call it. And we sold off heaps, 39%. Well, 40% drop, really. Huge, massive just drop. That was the Black Monday crash. For Black Monday, 1987. Biggest, largest drop in a single day. And it's in the weekly how badly it really got. All right. It's the first one. The second one, we will look at, go right up to the late 90s. So the MACD, you like to start at the MACD first, see where we are. So you had a high, right, a lower high on the MACD, so it went lower than that one. And then it went lower again. I had a secondary peak here. So you had a high, lower high, and even lower there. So that's clearly going down, right, trending down with the lower highs. But price is going higher. So low, higher high, and higher high, right? What happened soon after that? We crashed 28%. So pretty big correction for the Nasdaq. So that was pretty big. And as you can see there, it played out, okay, that three drive MACD. And then we had the .com bubble, and then it just burst. Whoa, crashed heaps. Went down a fair way. I'll just show you how, if you're really curious to see how far it went down. It went down 83%. It got massacred, the Nasdaq. Absolutely massacred. Went down heaps. So, yeah, very, very bad time to getting in at the very, very top euphoria stage. And then, boom, see you later. All right, the next time, we've got the three drive MACD. Divergence was the early 2000s. Okay, so the next decade. And as you can see, we had a higher than that one, and then another higher, which is higher than those two. So it's clearly going higher 3 times, 3 big peaks. And the MACD, I'll draw it here. We have a big high here. We had a lower high there. It's lower than that one, of course. And this level's even lower, but it didn't collapse straight away, okay, as you would have expected to collapse here. That is because, I'll show you why, because see how the price, that high is lower than that one, And the MACD, that is lower than that one. So it followed price exactly, okay? So it wasn't divergence. But when you got the MACD going slightly higher than this one, not much, but staying below this one, okay, importantly, this separated one, which was, from that high here to this one, we had 3 drive divergence. And what happened to price? It went higher than this level. This went lower than that one. And that was the 3 drive divergence, and we crashed 18%. Like, it's not really a crash, it's a correction. I don't even call that a bear market. It's just a good size sell-off. Next time it happened again. This is a bit smaller. This is a bit shorter of a distance than this one. But nevertheless, we still got it. We had a high, higher high, and higher high. So 1, 2, 3. We had a high, lower high, and lower high. So they're lower than those ones consecutively. And 3 drives. And then, as you can see how clearly it was, and what happened in 2007, we had the infamous great financial crisis. Okay, really horrible. And as you can see, Nasdaq fell 54%. Very, very nasty. It wasn't as nasty as this one, because this is more tech stocks, and Nasdaq makes up all the top tech stocks, and 100 of them, so, that's why it was really big correction, big crash here. It was a tech-related bust, whereas this crash was more of a housing. The housing market was collapsing, so a bit different, and the banks as well. A bit different to just tech stocks getting overvalued and just crashing. That was more so up here. But nevertheless, we got a crash anyway, or everything went down. And yeah, we had divergence, and crash. Okay, so that was that period. We have the next period in 2014 to 2015 and to 16, just about. And price kept going higher. Right, we had one high here. This we'll draw on the MACD, so it matched these highs. So the high here, all right, this next high was higher than that one. This was lower. Okay, then we got a higher high here, we got a lower high here, and unfortunately we didn't collapse. Okay, it didn't play out quite well. Okay, so we grinded higher, and the MACD just kept on going lower. Right, just kept on bleeding lower, till eventually there's a 50 line here, which is basically the mid-level MACD. We got below that durably, halfway point, and it just kept going lower, and then eventually it just crashed. And the percentage drop is very similar to this one, pretty much the same. I've drawn it there. It's pretty much the same. Okay, 90% drop right here. And we also had a big burst and a crash again. Collapse, and then, 18%. So similar drop, okay, for that one or that one, doesn't really matter which one you count. Divergence as, but you have 1 high, 2, they're well separated, and 3, nice big hilly peaks, and then eventually price crashed, all right? So it was a 3 drive-ish, sort of a longer version of it. If you even go to the monthly and have a look, 2015, we'll go back to 2015. Where are we? And it was here, I believe, yep. It's a bit different than monthly. Monthly's too far out. Probably best to look at the 2 weekly. It would have been shown a bit clearly. And that was 2015 there. We had an 18% correction. Next level, 2018. All right. We had high, lower high. All right, as you can see, and lower high. So 1, 2, 3. 1, 2, 3. Higher, lower. And then what happened? Crash, 23% in 2018. And then we had the pandemic drop. We had the high here. We started it. We had lower, just slightly lower there, as you can see. We went lower again. So it was 3 drives, essentially. But the price kept grinding higher inside this trend line. And as MACD kept bleeding, as you can see, it just goes lower. And eventually, if you want to count this as one big peak, one big separation of this, you have 1, 2, 3. It's more than 3, but, whatever. It was money was flooded in the system, and stimulus checks went out, and interest rates dropped to 0, and that's just crashed right down. So that was why we just kept grinding, despite what the MACDs were saying, and then we crashed eventually. It took so long, longer than 3 drives, that's for sure. And we crashed 37%. And now we have currently something similar happening. We have one big high here, the lower high here. Nice big separation between them. Nice big separation. All right, that's what I like to see. Another big separation here. And price did drop down to here, but now we're back up again on the weekly. But you can see he's definitely seeing 3 drive play out. So high, higher high, and even higher high. High, lower high, lower high. So this could go out longer like the other ones, okay? Like that period and that period was a 3 drive. That was a good one. But this one here was more than a 3 drive. But good to see, like, see this nice separation between the MACD. And nice separation, nice swings up and down. That's what you want to see, okay? And we're getting it sort of here. And see if we really can push higher or it comes back down, tests the trend line and goes lower. We'll see what happens. So that's that I wanted to show you there. And just some price where I see things going. If it do break the high, it's possible. I don't really see us going higher than that. It'll probably come back down to somewhere roughly 6.8 level. I'd say looking at around this level here, we had a bit of resistance at around 5,400. I'll see it come back up to there and potentially wicking higher, okay? And then coming back down, probably come back down after that and fall back to here, okay? Back down to these lows or potentially even lower. But at the very lowest, I'd definitely expect this to go probably by 2025-ish. It's very, very bearish. I probably wouldn't go that bearish actually by 2025. I'd see us going more so to this top level here, which is quite evident and noticeable at around 4,600, sorry. 4,600, okay. That's where I'm seeing the Nasdaq, the S&P go by the end of the year, okay. By 2025, I do see, this is what I'm seeing. There's this price prediction at 4,600. Not going as high as that one. Going back to the Nasdaq, I see something similar, the S&P, for example, and get something probably even a bit more brutal correction because the tech stocks have been really outperforming. And if you come up to around here, so we'll just get a fib level and retrace it down to the bottom, get a 6.8 correction up to here, okay, somewhere around here-ish, okay, 19.5 roughly, probably could come up to. And then after that happens, I do see us correcting. It's not working today, so a bit slow. Correcting a bit more, probably 28% correction on Nasdaq. Bit more brutal than the S&P, 16%, 15%. I see the Nasdaq, I keep clicking on the futures, sorry, around 28%, so 10% more of a drop than the S&P. Then you have other indices, which I don't really track much at all, like the Russell, small cap. Okay, I don't really care. It's only starting to outperform now. 2024 has been going up, grinding, but not really doing much, okay, compared to these two indices have just been rocketing up, especially from the start of the year to now, and the S&P as well. So they're the indices and the price predictions, and I showed you Nasdaq there, and yeah, that's it. All right, guys, I hope you enjoyed this quick video. I'm trying to make them shorter. They're getting a bit too long, and anything over 20 minutes is way too much. You know, you lose your attention span because everyone just wants a quick gasp of, dopamine, and they just don't get it from a 20-minute video. So I'm trying to keep them short as possible, and then eventually in the future, if I have time, I'll cut them up into clips so it's easier to watch again. Anyway, that was just my analysis on the Nasdaq, the free drive MACD divergence pattern going back to the 80s and where I see it going, and the S&P. So both of those indices and their price predictions for the end of the year, I see happening. And yeah, I hope you enjoyed this sort of presentation, seeing how interesting it was, the Nasdaq, seeing it's pretty dependable. A 2-drive MACD, which is quite common, is not quite reliable because you get that extra. If it's a high, you get extra high to fake those people out, or if it's lower, they go lower because their strategies are too predictable. So if you go 3 drive, it's an extra swing and it gives you an extra chance to see if it plays out. Okay, it's a bit wider divergence too, but it's not always accurate as I showed you in the charts. It can fail as well, but it's just very interesting nevertheless. Anyway, if you enjoyed this video, please smash the like, comment your thoughts below, subscribe to stay updated. Be sure to check out my links below, and I'll catch you in the next one. Cheers.